So, all right, let's just get into it. Everybody's having a great day. It's going to be a beautiful day here in Florida. And I see it's kind of getting cold in certain areas, but some people like the cold. But I'm a lizard now, so no more. You see how like iguanas fall from the tree? Yeah, that's pretty much what would happen if I went up north. Just kidding. I'm sure I can handle it. I lived in South Dakota. I can handle anything. All right. So the topic today is I already have life insurance. And what I'm going to explain is why that's not IBC. Okay. So when somebody tells me I already have life insurance, Jim, I smile and I say, perfect. You already have a lumber yard. Now let's talk about the paper mill. And what I mean by that is it's just two different things, right? Because it's like having a pile of trees doesn't mean you can print money. Having life insurance doesn't mean you're practicing IBC, right? We don't even know if the policy is designed right. We don't know if it's whole life, UL, term, anything like that. One of the things that really makes it work is it has to be permanent insurance that will stay in place for your entire life, right? So let's just kind of start where we start. Why do people buy life insurance? Not people that are doing infinite banking, but why do they buy life insurance? There's lots of reasons, but I'm going to kind of go over the main reasons in my 38 years doing this that I've seen people buy life insurance. Number one, protect their family from financial loss, right? There used to be this thing called capital needs analysis, and it was this it was like a little trifold thing that you would fill out, and you'd say, I have no reason to believe that you need more life insurance, but let me ask you these questions to see if you do, right? And it was so cheesy back in the 80s. I mean, man, so thankful I don't do that anymore. And it would be all kinds of different methods. It could be human life value, something that like a law firm would use if you were killed in an accident, like with in an airplane crash or something, and how much they would have to pay you, your human life value. And it'd be like how old you are, how much money you make, how much money you're going to make over your lifetime, all of these things, right? And then it was a big debate of how much money, what percentage of your income do you need for your family when you're not here? And all of these numbers got big. I mean, big numbers. People would say, well, I'm paying this premium to get this death benefit. It's not worth it to me. So they had the side fund, right? The whole life has the cash value. UL has this side fund. And it was like, what? You get this cash value too. So you're not really paying all this premium because it's offset by the cash value. Okay. That was the sale. It was a horrible way to sell life insurance. But when I was doing it, we were looking at investments, life insurance, disability insurance, all these things. And it was this battle of how much do you put in protection? How much do you put in accumulation? We know now that that's the wrong way to do it all the way around. Because when you do IBC, you'll end up with more death benefit than you would ever bought just for death benefit. You'll end up with it because you want more money flowing through there. You don't want less money flowing through your own bank. You want more. Okay, back to personal reasons people buy life insurance. Protect your family from financial loss. Number one, cover the debts and funeral expenses. That's number two. You have to pay those things, those bills, right? Leave an inheritance, which also ties into estate planning. Because guess what? After you paid tax, and you paid tax and you paid tax and you paid tax your whole life, the government's still going to come after you when you're dead. Yeah. So, yeah, more government? I don't think so. Leave an inheritance, right? The Bible says a good man leaves an inheritance. But is it really just money? Is that the inheritance? And look at throughout history, that doesn't work out well, right? And then peace of mind to know that if something happens to me, my family can stay in their own world. Well, what about when you're my age? Does that mean Dave Ramsey's right? Oh, you don't need life insurance after a certain point? I mean, I'm 60. There's nobody that's going to not, I mean, they're on their own, right? Go make your own money. So there's no dependence. Maybe my ex-wife that gets a check every month, but she'd get a big lump sum. That's part of our agreement. She doesn't even need that money coming in like that, right? I mean, like on a monthly basis then. But there are things like that, legal obligations. You get a divorce. Spouses have to keep insurance on each other. Could be in business, which we're going to cover here in a second. So most people buy life insurance because they want to protect against it dying too soon. But infinite banking helps you protect against living too long and doing it broke. And I just played golf yesterday with a great guy. His name is Tom. He's in his 80s. He is a happy guy. He is a happy guy. He played the six tees. Okay. We played all the way back. He played six tees up. And we had fun. And we had fun because this guy, he has the right attitude about life, right? He's happy. He's out there playing golf. He just joined our group, you know? He's like, hey, I hope it's okay. I jumped in here. Absolutely, man. Let's have fun. And we did have fun. He was chucking it up and, we were just having a good old time. And he and I won the last hole to win our match. And we play COD. Okay. Carts, 6 holes. There's 18 holes in golf. If people don't know, some people don't know. And then so it's 6, 6, 6, 6 holes, 6 holes. Not the sign of the devil, but it's just the way it works out math-wise. Is carts opposite drivers, right? So if a driver and the passenger on the other cart. And Tom and I were the partners on the last 6 holes. And I got to tell you, I thought, gosh, he's going to be tired. I don't know but I played really good in the last 6 holes and we beat him. And Tom won all 3 matches. Why? Well, Tom gets a lot of strokes in his 80s, and you can't beat strokes. For every serious golfer out there already knows that. Is if they play decent and they're getting strokes, they win. Okay, so let's pivot to business reasons. Okay, and I'm not going to go into the talking about these different things, but business reasons are key person insurance. You have a key person in your organization. If something were to happen to them, it would be an economic loss to the business, right? Buy-sell agreements. You and I own a business and something happens to either one of us. I want to be in business with your family when they're not doing anything, and you don't want to be in business with my family when they're not doing anything. Collateral for loans, right? The bank might say, well, I need you to have life insurance, or you need you to collateralize some of your life insurance, your death benefit to the bank in case something were to happen to you. Now, the fact that they do that tells you that it's smart because banks aren't dumb. Executive bonus and retention plans. Executive bonus and retention plans. Now, why would somebody do an executive bonus when I got a 401k, et cetera? Because it's non-qualified. You can discriminate. That's not a bad word, meaning a high performer you could give more money to than a low performer, right? Or somebody who's been with you longer. You could do something with golden handcuffs. You could do a vesting schedule. You could do all of these different things. And you don't have to play by the government rules and penalties and all that crap. Okay. So the other thing is that, and we're not going to get into this today, but banks own BOLI, bank-owned life insurance. Corporations own COLI, corporate-owned life insurance. And the only thing I will say is that Walmart tried to insure every single employee, right? And the Obama administration said, no, you can only insure like 25%, the top 25%, because you don't have economic loss if a greeter at a Walmart store goes down. But they knew the math, and they knew that they were going to have a bingo every week. Somebody in Walmart's going to die, right? And they thought it was great. They were going to buy life insurance on everybody. Banks are only allowed to have 25% of their tier 1 assets in life insurance. Now, think about that. You know what happens? And this happened to a bank up in Minnesota that I was working with, is their life insurance cash values were growing faster than the bank's assets. So they kept on violating that 25%. And they said, Jim, how are we going to fix this? And I kind of, as a smart aleck, I said, somebody's going to have to die, so thank God nobody did. But they could explain why it was that way. And I don't know what they ended up having to do, honestly, from the FDIC audit, but excuse me. All right. So those are just some of the things that you do with life insurance. People just buy life insurance. But remember this lumber yard versus paper mill. So I want you to imagine or think of a lumber yard. A lumber yard stacks up trees and raw materials. It's like your traditional life insurance policy. In storage, potential value, but not creation, right? Now, picture the paper mill. Same wood, but it's now processed, engineered, multiplied. The paper mill produces value over and over again. That's what infinite banking does with your money. In other words, life insurance, raw materials, infinite banking, system of production. I hope that makes sense. And like normally, if we were in really live, I'd ask you guys to comment on that. But just remember this: you can't print your own money in the lumberyard, but a paper mill can turn the same resource into a cash flow engine. This is the difference between life insurance and infinite banking. So what is IBC if it's not the life insurance policy? Okay, now this might be redundant, but it's so important. Okay, now we're going to move from kind of this metaphor that I want you to kind of visualize to mechanics. And in simple terms, IBC isn't a product, it's a process. The life insurance policy is just the tool that powers the system. It's just the engine. It's the wealth engine, right? So let's break it down to 4 points. Why is it that? Okay, control. Banks want to control the money. You need to control your own money. You control the flow of capital instead of the banks. Right there. If that was all you got, that's enough to do IBC. Liquidity. You can access cash without selling assets or triggering taxes. Okay, so liquidity. Control liquidity. Growth. Dividends and compounding work uninterrupted. Uninterrupted. And if you read Darren Hardy's book, Compound Effect, or if you've ever looked at a penny doubling for 30 days, okay, a penny doubling for 30 days ends up at $10,787,000 after 30 days. But if you take money out on day 21, you end up with $2.56. An extreme example, I know. But interrupting your compounding is devastating, okay? So uninterrupted compounding and growth. The last thing, and this is where the people that are out there marketing IBC that have never done this don't get it. Leverage. Your money does 2 jobs at once. It's an and asset. It is collateral for the loan from the insurance company, and it grows. Tell me where that happens. Tell me where else that happens, because it doesn't. So if I put $100,000 into a traditional savings account, it just sits there. If I put money in my IBC policy, I can borrow against it, and my 100,000 is still earning interest while I use it. That's cogeneration. 2 outputs from 1 source. You want to know what cogeneration is? That's it. 2 outputs from 1 source. So let's stay on this cogeneration thing for a minute, okay? Let's think of like the energy industry. In power plants, cogeneration means producing 2 forms of energy from 1 process, like electricity and heat. In infinite banking, your dollar is doing cogeneration because it's growing inside your insurance policy. It's financing your life, your business, your next asset, all at the same time. Now, let that sink in, how powerful that is. Like we talk about, and people talk about all of this crap online. I mean, that alone. Who's talking about that? And how do I then take all of those things, my business, my life, my next asset? How do I coordinate those pillars in my life to generate what? Passive cash flow, right? Or as passive as you can get. Then what am I going to do with that cash flow? I'm going to live my life. Then what am I going to do when I have more cash flow than I need for my life? Well, then I'm financially free. Free to do what? Whatever I want to do. Do I want to give money away to my favorite charity, to my church, to my synagogue? Whatever I want. I am free. So when I'm free, then my creative mind can be as big as I want it to be. And what's the opposite of free? That's a slave. Show up at 8, you can leave at 5, and this is what I want you to do between those hours, right? Okay, so people say, that's risky. Well, risky is living your whole life 8 to 5. Because people say 9 to 5. Who's working 9 to 5? I mean, right? I mean, it used to be, even that's expanding. I had a friend, she had her manager come to her, and this was her motivational sales pitch. If you just work 5 more hours a week, you're going to make this much more money. Who the heck wants? She's already working full time. She's trying to motivate her somehow to work another hour a day. Why? Motivate her to be more productive. Okay. So when you're doing all of this with infinite banking, you're not spending money anymore. You're recycling it. That's the system the wealthy have used for centuries. Centuries. It's not something new. It's not something Nelson Nash invented. God invented it a long time ago. So here's really the misunderstanding. People think infinite banking is a life insurance policy. No, it's the way that you use the life insurance policy that changes everything. Do you have protection for your family? Yes. Could you use it for funeral expenses? Yes. Could you use it as an inheritance? Yes. Could you use it? All of these things while you're doing infinite banking. Because what we're doing is controlling the cash. The death benefit will do all of those things, all of them. And you'll have more death benefit than you've ever thought about having. Okay, so with infinite banking, it's not about dying. It's not about like term insurance, one benefit. It's about living and controlling the capital while you're alive. While you're alive, while you're like Tom in his 80s. He's got to be in his mid 80s. I meant to ask him, but I mean, I know he's over 80, but he's living his life. It allows you to live. I'm not saying he does infinite banking, anything else. I'm just saying he's rare in this neighborhood. Most 80-some-year-olds in this neighborhood are grumpy. And they look at you like, oh, are you going 3 miles an hour over the speed limit? Because they have nothing else to talk about or do. So again, it's not about dying. It's about living and controlling capital while you're alive. So traditional life insurance transfers risk. Infinite banking transfers control. You control the banking function. That's how you're going to be wealthy. That's how you're going to be free. That's how you are going to have a chance at happiness. It's progress, progress, control. And then compared to what? Going to work for an 8 to 5 job and somebody telling you, hey, Nathan, get here at 8, leave at 5. And here's what I want you to do in those 8 hours that you're working. And I'm going to make sure in that lunch break, you leave at noon and you're back here at 1 o'clock. And if you're not, I'm going to give you a sideways look. I'm going to give you a smart aleck comment. I'm going to say something, right? So which life do you want? Do you want the life of freedom that's risky? Or do you want the life of a slave? That's not risky. Well, it is risky. It's way riskier, right? I mean, look at the people that are being laid off at Google and Amazon, right? Or Microsoft and Amazon, I'm sorry. It's way riskier because you can get laid off. Your job can be terminated and you have no control. Is being on your own, doing your own thing, risky? I don't care if it is or not. Walking outside is risky to some degree, but I want to stay inside, lock myself in my own prison. And that's what you do when you have an 8 to 5. And life insurance is for people that are in prison in some ways. They got to make sure they got this protection, that their family's protected, everything else. Infinite banking is how to take that prison and make it free. I hope you guys have a great weekend and Godspeed. Next week will be recorded as well. I got a couple doctor's appointments at the same exact time on Thursdays. It's the only time she could see me. So I apologize for not being live with you guys. I always enjoy interacting with you. So if you need anything, send me an email, send me a text, and help you any way I can. Godspeed. We'll see you next week.